Okay, back with you, Helena. Did I hear you say that people that don't have college educations should pay more for their insurance?
No, I said that some people who don't have college educations, who don't have it because they have attention deficit disorder, or they're more risk-taking, and they're unable to focus as well on their driving and also to think ahead about when they take risks when they're driving. Now,
I cannot believe I'm hearing you say this.
Well, another thing that you
she's got a college degree, that's why she thinks that way.
No, I'll tell. Well, I didn't have a college degree until I was out, divorced and a few years ago. Now, another thing that people have to worry about when they're getting their insurance is the loss rate of the guy they're buying the insurance rate from, because the company will charge a higher rate to his customers. Now, if he's got a bad record of people, he has bad luck in who he had get the insurance from him, he's going to have to charge you higher because he's getting it at a higher rate, and that's what you'll have to worry about, your middleman. And, can you go to the insurance, the Bureau of Insurance here in Pennsylvania and find out what their rates are? That's another thing you've got to look at. You can't
sure, I mean,
that's
a separate issue. I mean, they could go to drivewell.com and they could find out a rate quote, too. I mean, yeah. I think the issue here is really, do you believe that it's okay that people are charged more?
It's not happening.
Okay.
It's where you
so
live.
Now you're factually contesting something that actually occurs in the state of Pennsylvania.
I'm telling you about the people in Harrisburg. There are a lot of them that have college degrees and more, and I know some of them that pay $85, $100 a month.
Right. I'm sure there's lots of people out there that we could name.
Right.
I'm just saying, factually speaking, it is a true statement that there are some insurance companies licensed in Pennsylvania that charge more.
There are a lot of them that are
okay, Helen. All right. Thank you. I mean, she's just determined to believe what she wants to believe, and the hell with facts. Rich, hi, you're on WHP. Go ahead.
Hey, Bob. Thanks for having Eric on. I didn't know about this either, but I have to tell you, I don't think that if we call and complain to our representatives, they're going to care. And the reason I say that is because for years I've been writing my representatives about the use of the credit score to make higher insurance premiums. And I think that's unfair for the reasons that Eric was talking about earlier, that the state requires that you have auto insurance. And if you fall on hard times or if you go through a divorce and you have some problems with your credit and things like that, you go through a foreclosure or whatever, all of a sudden now you're in a category where you've got to pay more. And I think that is patently absolutely wrong. Your credit has nothing to do with.
Well, how can the insurance company, Eric, decide and presume that because you have something less than stellar credit, that you're going to renege on paying the premium? And even if you do renege on paying the premium, they eliminate your insurance right off the bat. They don't lose anything.
That's exactly. You're striking a very good point, Bob, and that's actually a big, huge misconception. The fact is that you're 100% right, Bob. All of these insurance companies in each state have what's called equity-based policies. So we have to provide you insurance so long as you pay. But the minute you stop paying, we don't give you any coverage. So we're never really at a risk. And so the argument really isn't that credit scores are so we can ensure that we don't have to chase people down for payments for insurance. The fact is this: higher income people have more money out of their own pockets to absorb fender-bender claims. Higher income people actually are used for data mining, meaning most people don't know this, and I'm sure Helen doesn't believe it either, but there are insurance companies that if you go to their website right now and you just want to find out a quote for car insurance, there's a terms and conditions portion of that website that, if you read the fine print, says that you agree and acknowledge that this insurance company, whether you buy a policy with them or not, can take your information, your credit score, your education, who you live with, who's in your household, and share it with any of their marketing partners and or sell it. Meaning that data mining companies, like, you ever wonder why if you own a Ford, just when your lease is coming up, you get something in the mail from Chevrolet saying that there's another SUV that's for sale? It's because your data is being sold, and you're not even the only acknowledgement you have is the terms and conditions on a website. So there's a lot of things here that come down to the fact that richer people give insurance companies more to go after because they can sell them homeowners insurance, they can sell them life insurance. How many working class poor people have boats that they need to insure? How many working class people have life insurance that they're thinking about buying? Very little. So insurance companies aren't attracted to the lower, middle to lower income people. They'd rather insure people that are of higher income, and that's what it comes down to.
Well, Bob, just to go back to what I was saying real quick, just so you can go to another caller. The problem I'm having is, for years I've been telling the representatives to introduce legislation to stop the use of credit scores. I understand why they're using credit scores. Eric explained it very well. That's exactly what the reasons that's been explained to me. It is wrong. And all these years, our representatives still have yet to introduce legislation to stop it, and I'm sick of it.
Well, here's I think you have a great point. I just want to address it this way. Number one, I wouldn't be disheartened about the fact that you've written on credit scores, because it's more difficult to argue credit scores because we don't have data available to us to argue on your side. But if you go to a legislator and you stick a U.S. Census in front of them and you tell them, look, the most credible information we have in this country says that 73% of adults over the age of 25 do not have a four-year college degree that are over 25 years old. And that's 73% of your voters. And if I know that this thing gets out there and we have petitions and people actually care enough to tell other people it's wrong, you tell me how a legislator who's only looking to be reelected can fight the cause that 73% of his adult population is voting for him, says, I'm being disadvantaged by this type of rating and underwriting.
You're right. I hope we do that.
We need to get the word out. That's my point.
Well, you know what, Bob, once again, you're proving how valuable you are here on the air. I mean, I never knew this. I'm infuriated about the credit scores, but now what I'm learning about, I don't have a college degree. I'm self-employed, and I teach myself what I did, and I saved a lot of money by not going to college. And now I might be learning I might be paying more because of it. That's unfathomable.
You're being discriminated against.
Absolutely.
All right. Rich, thank you, friend. Thank you. Eric, if somebody goes to their insurance agent or decides to, go be insured by somebody, and he asks the question, hey, am I paying a higher rate because I don't have a college degree? Does that insurance agent have to say yes?
They're supposed to, yes. I mean, they're a licensed agent in the state, therefore they have ethics that they're supposed to abide by. If they don't know it, that's another thing. What some of these national companies do, Bob, is they actually try to become so sophisticated that the layperson doesn't understand it. So what they do is they create an algorithm, and they put little factors in it, and they say, listen, Bob, I can't tell you categorically that we use education level as a factor on its face. What we do is we take 50 other factors, and you might see this in recent national insurance commercials, and they say, we tailor this policy directly to you, Bob. So what happens is they put this huge algorithm together, and it says education level, and they might put a really high number score that they're going to put. And at the end result, when we add all those numbers together, anybody with an over 500 scores is going to get the lowest rates. And because a large component is education, people with higher education levels will get the lowest rates. So the agent or broker that's being an agent for those types of insurance companies may not even know that this is being used because they've disguised it and camouflaged it in that fashion.
Jeez. My goodness. This sounds so dishonest.
Well, you know what, we do not have a great track history as an industry, and you know what, and that's what I've argued all the time. When I had my trade industry come to me when we broke this story nationally and in New Jersey, the trade industry came to me and they said, Eric, why are you doing this? Why are you telling everybody about this? And I said, because I think it's wrong. That's why. And you know what the person said to me, who's a representative of our trade industry? He said, Eric, you're talking about ethics. I'm talking about business. And I said to him, I didn't know that they were mutually exclusive.
So he separates ethics from doing business.
Correct.
Which means he's unethical.
Well, he says that one interest may have nothing to do with another.
Oh, please.